Is Ethereum dying, or quietly preparing for its biggest breakout yet? After a brutal sell-off that wiped out hundreds of millions of dollars in leveraged positions, Ethereum has plunged from its cycle high and is now testing a critical support zone between $1,600 and $1,700. Unsurprisingly, market sentiment has turned increasingly bearish. Many investors are beginning to question Ethereum's status as the king of altcoins, with some even claiming that Ethereum has officially been left behind. But what if that's exactly what the market wants you to believe? Is Ethereum truly entering a long-term decline? Or is this simply another classic shakeout, a bear trap designed to force retail investors out before the next major rally begins? In today's video, we'll uncover what's really happening beneath the surface by breaking down Ethereum's money flow through three key price zones. Combining technical analysis, institutional behavior, and ETF capital flows, Ethereum has been frustrating investors for months, especially while other ecosystems have captured most of the market's attention. On one hand, spot Ethereum ETFs have recently experienced short-term capital outflows as global investors reduce risk amid rising geopolitical uncertainty and tighter financial conditions. On the other hand, the amount of Ethereum locked in staking and Layer 2 networks continues to reach new all-time highs. This creates one of the most interesting divergences in today's crypto market. While speculative liquidity has pushed ETH's price lower, the network itself has arguably never been stronger. Whenever an asset with strong real-world utility continues to trade near major support despite improving fundamentals, it often signals a long-term reaccumulation phase. Institutional investors rarely chase assets after they've already exploded higher. Instead, they take advantage of fear, negative headlines, and macro uncertainty to quietly accumulate positions at historically important support levels. Disclaimer: this is not financial advice. Key zone number 1. $1,600 to $1,750. This is the first price zone every Ethereum investor should be watching closely. Technically, it aligns with Ethereum's long-term ascending trendline that has remained intact since the 2022 market bottom. Order book data also suggests that the area below $1,700 contains significant institutional buy-side liquidity, while large sell walls remain relatively limited. If Ethereum can print a strong weekly candle with a decisive rejection from this support, the recent breakdown could officially become a classic bear trap, opening the door for a recovery toward the $2,400 resistance level. Key zone number 2. $1,300 to $1,450. If worsening macroeconomic conditions force Ethereum below its long-term trendline, this becomes the next critical support area. This range sits below Ethereum's long-term moving averages while also aligning with the previous cycle's major breakout level from 2018. From both a technical and liquidity perspective, this is considered a low liquidity zone. If Ethereum falls into this range, price could move extremely fast due to the lack of nearby buying and selling interest. For long-term investors, this isn't necessarily the ideal accumulation zone. However, for active traders, it could present an outstanding opportunity to capture a technical rebound of 20% to 30% or even more. Key zone number 3. $1,000 to $1,150. This is the ultimate structural bottom, and the market's full capitulation scenario. It would likely only come into play if a true black swan event triggered another wave of panic across global financial markets. From a technical standpoint, reaching this range would complete a textbook 5-wave Elliott wave correction, signaling that the broader downtrend may finally be exhausted. History has repeatedly shown that whenever Ethereum trades below its network's realized value, it has often marked the beginning of a new multi-year bull cycle. Ironically, the moment of maximum fear has consistently created some of the greatest buying opportunities in Ethereum's history. Can Ethereum defend the $1,600 support level and rally back toward $2,400? If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our next deep dive into the crypto markets. Thanks for watching, and I'll see you in the next video.